preparing for this 30 June 2021 reporting season, there are some key things that you should be working through. As usual, you should be looking at the amendments that are effective for the first time this 30 June, and also having a look at the amendments that will be effective in a future period, and consider whether any of those are worth early adopting for your organisation. Two amendments in particular that we draw your attention to, because we do think it might have broader impact, are the ones dealing with eyeball reform and rent concessions, including the newly issued one-year extension to the COVID-19 rent concession amendment that was issued last year. There is one new standard, AASB 17 insurance contracts, that is also worthy of your attention. While it's not effective until 2023, you'd be very surprised to hear that the new standard does not only apply to insurance companies, it actually applies to contracts, regardless of the type of organisation that issues those contracts. Some common fixed fee contracts to provide maintenance services, roadside assistance, phone screen repair, extended warranties, depending on their terms and conditions, might actually meet the definition of an insurance contract. Surety bonds might also be considered an insurance contract. AASB 17, this new insurance standard, will be complex to implement. So therefore, you should be looking at these types of contracts that your organisation issues to see if any of them might meet the definition of an insurance contract and be captured by the scope of this standard. Our webinar also talks about recent IFRIC agenda decisions that have been issued. One in particular that I want to draw your attention to is the one dealing with customization and configuration costs incurred in implementing a software as a service arrangement. Under this IFRIC agenda decision, less costs will be capitalised, and it is expected that this agenda decision will be applied this 30 June. So therefore, if your organisation has had any significant SaaS implementation projects in, say, the last 5 years, then you want to have a look at this agenda decision soon, as the process of analysing all of these costs that you have incurred to identify those that would be capitalised and those that would be expensed in accordance with the IFRIC agenda decision can be quite time consuming. Our webinar also has a look at some hot topics in reporting. The first one we talk about is climate risk and the impact on the financial statements. Our local regulator and standard setters, they've all issued guidance highlighting the importance of considering climate change and climate risk in the preparation of your annual report, including your financial report. While there is no dedicated accounting standard dealing with climate-related risks, our webinar does run through the key areas of the financial statements that could be impacted by climate risk. In particular, we look at impairment testing and the going concern assessment. Another hot topic is in the area of employee entitlements. So if last June your organisation recognised a provision or disclosed a contingent liability for employee entitlements for your casual employees, then you will want to have a look at the March 2021 amendment to the Fair Work Act to see if there is the possibility of reversing some of those, those liabilities that you had recognised in a previous period, with the gain being recognised through P&L. ASIC continues to be active in their financial reporting monitoring activities. While their focus areas this 30 June are expected to be largely consistent with those of previous periods, they are still asking a lot of questions, with the benefit of hindsight, about impairment testing, especially with regards to the assumptions that have been used in your cash flows for determining a recoverable amount, which I guess can be challenging in this time of COVID-19 uncertainty. And lastly, this 30 June 2021 could be the last time that many of you will be able to prepare special purpose financial statements. But before you rush ahead and roll forward your accounts one last time, we do encourage you to consider early adopting the General Purpose Simplified Disclosures Framework this June, as there are transitional reliefs for early adopters. So those are our key considerations this reporting season. Good luck with your year-end process. Thank you.